Good morning, hello and welcome to Money Control's live stream. You're watching Opening Bell with me, Lovisha Darad. Well, it's a fresh day, it's a fresh week as well. We saw deep cuts in the markets last week. Both Sensex and Nifty witnessed the worst week in 2 years, owing to tensions in the Middle East and the increasing foreign outflows. But we'll see whether or not the markets are ready to move on and put behind the geopolitical worries and the China opportunistic trade. Well, the GIFT Nifty definitely leads us to think with a mildly positive start. The pre-open rates are also indicating a bit of a flat trade and a flat start for the Indian markets as well. This week, it'll be a data-driven one because we have the RBI MPC meeting, which is starting off today, and the India Inc.'s Q2 results are also going to be on radar. We've had a strong global handover, be it from Wall Street or Asia Pacific markets, post strong September jobs report. But we will be watching out how the market texture unfolds during the day. So plenty lined up in the show. Don't forget to take up your stock related queries, and we will be taking up your stock related queries with our technical expert and understand how they stack up on the charts. So keep posting them in our live feed and we will try to address them before 9:30 a.m. For now, let's take a look at the top headlines this hour. Stronger than expected jobs report sees Wall Street close higher on Friday. It also recorded its fourth week winning streak. Dow Jones closes at record high as hopes of Fed pulling off a soft landing rise. Stocks in the Asia Pacific markets opened largely higher, led by the Japanese Nikkei 225. The GIFT Nifty is hinting at a positive start for the Indian markets. Crude oil fizzles gain after logging in biggest weekly gain in a year as market watchers watch out developments in the Middle East. Gold prices slip after a stronger than expected September jobs report boost US dollar and scale back expectations of aggressive rate cuts by the US Fed. The two-day monetary policy meeting by the RBI gets underway today. Its experts largely expect the central bank to hold interest rates this meeting, but commentary on timing of rate cuts will be keenly watched out. With markets witnessing worst week in 2 years, Sensex and Nifty, they are now off 5% each from its record high levels. While Nifty still managed to close above that 25,000 levels, in the last trading session, we will watch out if today it'll be able to sustain this level as well. We saw last week investors lost about 17 lakh crore rupees, and large caps like Reliance Industries, HDFC Bank and ICICI Bank contributed heavily to the fall. All the sectors also ended negatively last week. Only Nifty Metal Index ended last week mildly in the green. Now, this week we will have RBI MPC meeting kicking off today. Experts do not expect any rate cut to happen this meeting, but the timing of the next rate cut will be keenly watched out. Many also expect a change in the stance to neutral. But rate-sensitive stocks like banks, autos and realty performance, all of them will be watched out in today's trading session as well. We have the Q2 results that will be commencing from this week onwards. From 10th of October, IT Bellwether TCS is going to start off the Nifty 50 earnings season, and we'll watch out how the Nifty IT index also behaves this week as well. Apart from that, FII flows, that will be an interesting data point that will be watched out in the remainder of the week as well, as they have remained net sellers from the past 5 trading sessions as well. Now coming to some of the option queues data, Nifty put call ratio, it fell to 0.69 levels, one of its lowest levels since March 13, from 0.88 levels in the previous session. In the F&O ban list, we have GNFC, that was the new entrant in the F&O ban list, whereas Bandhan Bank, Birlasoft, Granules India, Hindustan Copper, Manappuram Finance, RBL Bank continue to be a part of the list. None of the stocks, they were out of the F&O ban list yet. Now, if you look at the foreign flows data, that has been interesting, and as I mentioned earlier as well, so far this month, FIIs have been the net sellers selling to the tune of 10,000 crore rupees in the past session. DIIs, however, continued to hold the fort. They bought around 9,000 crore rupees in the cash markets in the last trading session. Even today, CLSA came out with its global strategy report saying that they formally raise exposure to China to 5% overweight, and they have lowered India's overweight rating to 10% from 20%. So we are seeing a shift in the foreign brokerages outlook, and we'll see how it pans out in the remainder of the year as well. Now, just a couple of minutes before we hit the opening bell, we have the pre-open rates, out right now, and we can see that Sensex is already, floating above the green, 0.2% higher in pre-open rates. But we'll see how that pans out. But on that note, let's quickly get on board with our technical expert of the show, Aamar Singh of Angel One. Aamar, good morning. So good to have you on the show.
Yeah, thank you for having me.
Aamar, we saw technical weakness, overbought conditions, in the last week as well. But Nifty, it somehow managed to hold above that 25,000 mark in the last session. So what are the new levels for this week?
Yeah, so if we look at Nifty, what we are seeing is that there was almost a 4.5% correction, both in Nifty and roughly around the same in Bank Nifty. And primarily, if you look at the heavyweights, like Reliance was down by almost 9%. HDFC Bank was also down by almost 5%. So somewhere or the other, there is selling pressure, and across the board, we have seen the advances versus declines. And primarily, I would say a couple of factors which have been there: the escalation of the Middle East crisis, while at the same time the sharp rally in the Chinese markets up by almost 30% over the last month or so, and recently was the stimulus packages which have been announced. So these clearly point that there could be selling pressure, because FIs have also sold close to 30,000 crores in this month itself. So that bodes that there could be selling pressure, and technically also the markets are, from a short-term perspective, they see that there could be some selling pressure. On the downside, Nifty's got strong support coming on the 24,500, 24,600 levels.
Right. That is coming in for Nifty 50. But Aamar, Bank Nifty, that is about 6% off its record high levels also that we hit last month. So can we expect some recovery this week onwards?
See, if you look at Bank Nifty, again, Bank Nifty, major weightage, almost 30% plus weightage is in HDFC Bank. So there we see that there is still not much signs of an up move, because if I look at HDFC Bank, there is selling pressure there as well. And if I look at some of the other banks in Bank Nifty, be it your ICICI Bank. So ICICI Bank is also down by almost 5%. So till the time we don't see a pullback in both of these, I would say, major heavyweights, we've got other banks in terms of IndusInd is down by almost 5.5%. So the major banking stocks are clearly indicating that there is selling pressure. Even Kotak is down by 3.5% last week. But yes, they are approaching towards crucial support zone, so we could expect a pullback. And Bank Nifty on the upside has got strong resistance coming around the 52,500 level. So that's a zone of resistance. On the downside, 50,500 to 600. That's a zone of support for Bank Nifty. So it's more of a trading play for both Nifty and Bank Nifty, and also it would also be a factor of some of the triggers which come out later this week, or like there was some positive up move on the back of the strong US non-farm payrolls data, which came in almost at 250K for the month of September. So some triggers are going to really decide. And yes, the Middle East crisis is definitely one of them, which could have an impact, provided it is not, if it is contained, then we could see a consolidation in the markets.
All right, some consolidation expected. But Aamar, you talked about HDFC Bank, because it's a key constituent for the Bank Nifty performance as well. We saw that the Q2 update has seen a sequential uptick in the deposits in the September quarter. In MSCI Rejig also, it is expected to receive certain inflows as well in the month of November. But so far this year, HDFC Bank has been a key laggard. But, do you expect certain recovery to happen? Any key levels that you're watching out for HDFC Bank?
Yeah, HDFC Bank, I've been very clearly saying that it's very good from a trading perspective. Somewhere on the downside, 1600, 1620, 1630, that's a very good level for entry. Upside, it's not been able to breach its all-time highs of almost 1794. So that clearly is somewhere where we are seeing some sort of pressure there in HDFC Bank. So HDFC Bank 1600 and 1800, that's the range for HDFC Bank. Yes, if it starts breaching and sustaining below 1600, then we are in for some sharp selling in our indices and overall market. So that's one major level to watch out for HDFC is 1600 on the downside.
Okay, 1600 on the downside for HDFC Bank we have to look out for. But Aamar, Nifty IT index, that is seeing a seesaw trade in the past couple of sessions. We have Q2 results that is coming up, this week onwards as well. So can the results help the index surpass new levels or, see a bit of a recovery in the coming sessions as well?
So if we see if we look at the Nifty IT index in particular, so there we are definitely seeing some sort of consolidation there because it's not corrected. If you look at the overall markets, the way the markets have benchmark indices have corrected by almost 4.5%. Nifty IT has really held firm. So that shows that there is some sort of, I would say, interest in the IT space, and also investors are looking forward how the TCS results, because that's going to set the tone of the IT space as well. And apart from that, if you look at the other IT names like HCL Tech, that also has marginally declined. If I look at Infosys, Infosys has also been holding firm, though we've seen some sort of marginal correction. But overall, IT is still holding up quite firm. So we'll have to watch out for because now we've also got the earnings season coming off. So how that plays out will decide the direction of the IT stocks.
All right, we will be watching out for Q2 results as well for any action towards the Nifty IT index. But coming to a stock in focus, Titan has come out with its September quarter update. The total business has grown by 25% year on year. The management has also indicated that they are seeing a demand recovery after the government cut custom duty on gold imports. Watches and wearables, eye care, business, jewelry segment, all of them are seeing a good performance on a yearly basis. But Aamar, on the charts, Titan has been quite the underperformer. Be it on the 6 months charts or on a YTD basis, Titan hasn't really performed well. So do you believe that Titan stock is already overvalued at the current levels?
See, Titan is clearly indicating, technically, if you ask me on the charts, is that a top has been made, and there's also a double top formation in Titan, because if we go back in time, so somewhere towards the first week of February of this year, Titan had made a high of almost 38.86, and recently, as recent as last week, it had made last week it had made a high of almost 38.67. So somewhere around 38.50, 3900, that's going to act as a very strong resistance zone. Also, if you look at the charts of Titan on the longer term, that is on the monthly charts, clearly there's no trend. So effectively, it means is that higher levels will be sold into till the time we don't see the stock sustaining over the 3900 level. On the downside, yes, the stock has got good support coming around the 3600 level. So again, it's more from a trading range. If you ask me about the trend, I would say I wouldn't say that the trend is down for Titan on the intermediate or the long-term trend. The trend is up, but it's not very strong for any or indicating any significant rally in the stock. So it could be more of consolidation and a range play for Titan. 3600 and 3900, that's the range to watch out for. So it's good from a trading perspective, just like I talked about HDFC Bank.
Okay, some consolidation expected. But first rates over, popping on your screen, we have the opening bell. We can see Nifty 50 holding above that 25,000 level, 25,100 level itself. 0.4% uptick on Nifty 50. Sensex 2 is up about 400 points. So, after 5 consecutive days of straight selling, we are seeing a relief for the markets as well. Sensex up about 0.5%. Nifty also 0.4%. It's above that 25,100 mark as well. So quite a bit of a relief that is coming in for the markets. We are seeing Bank Nifty, that is also doing well. It is about 0.3% up. India Wix, we saw about 7% shot up in trade for India Wix, but that also has cooled off. It is like down about 0.4%. It is above. It's floating right above the 13 and 14 mark, but we'll see how the India Wix performs as well. Some of the top gainers and losers on the Nifty 50. Let's take a look. We can see, most of the IT names, they also have been doing well. The likes of Wipro, HCL Tech, that has been doing well. It is up about 1% each. ITC, Hero MotoCorp, after consecutive days of selling, it is seeing a bit of a relief in today's trading session. It is up about 1% in today's trading session as well. Apollo Hospital, that is also dominating in one of the Nifty 50 charts as well. But some of the top losers on the Nifty 50 constitute HDFC Bank. HDFC Bank once again still down about 0.2% in trade. Apart from that, we can see the likes of Cipla, Power Grid, HUL and Bajaj Auto. They're also not doing well as well in today's trading session. But we have let's take a look at Macrotech Developers, how this stock is doing, because the company has come out saying that it has recorded best pre-quarterly sales growth in the September quarter and is also on the target to meet full year guidance of 20% growth. Macrotech Developers on the chart, summer it is down 6%, from a 6 months perspective. Can we expect a breakout for Macrotech Developers?
I would say, if you ask me, at least from a short-term to intermediate-term perspective, the game is up for Macrotech Developers technically, if I look at the charts, because some of the technical indicators clearly point towards consolidation. Yes, the stock on the long-term chart though remains positive, but the momentum on the intermediate-term trend has come off really hard. So, more from a trading perspective, the stock has a good support coming around the 1100. So 1100 and 1400, that's the range for Macrotech Developers. There is right now a complete lack of trend on the intermediate term basis. As I said, short term it has got good support, so we could expect a pullback, but only a sustain above the 1400 level can you expect some major rally in the stock. Otherwise, the stock could, I would say, guide it between 8 to 10% on the upside and downside. So it's not in a trading in a trading zone right now, trending zone right now.
Okay, not in a trending zone right now. But if we look at some of the sectors, all of the sectors are doing well in trade today. Be the likes of Nifty FMCG or Nifty IT, all of them, holding well. Nifty Metal also popping up in the green as well. Apart from that, broader markets are also seeing a good uptick. But Metropolis Healthcare, it is flat in trade today, but the management came out saying that the revenue has grown by 13% year on year in its Q2 update. The management said that the revenue growth was backed by the increase in volumes and patients. The company also notified itself as debt-free with 180 crore rupees as cash reserves. Aamar, on the charts, Metropolis Healthcare, it has been quite the stellar. It has been doing well, be it the 6 months or even the YTD basis. So can we expect the bullish momentum to continue from here on as well?
See, if you look at the trend of Metropolis Healthcare, clearly the trend is up. There's no doubt about it. So effectively, it means is that any pullback is a buying opportunity. Having said that, what we are seeing on the intermediate term charts, that is on the weekly charts, there is clearly a decline in the momentum. So the momentum which was earlier there, that seems to be weakening off. However, having said that, if you look at it from a long-term perspective on the monthly charts, continues to remain strong. So effectively, it means is that pullback is a buying opportunity. If you ask about the levels to watch out for on the downside, currently it's around 2230. So ideally, short-term support is somewhere around 2150, 2170. That's a range of support where the stock could find some immediate support. Otherwise, on the downside, it has got good support below the 2100 levels. Upside seems to be capped right now around the 2300, 2350 zone. So I won't recommend buying at the current levels because the risk-reward ratio might not really be that favorable. But yes, on any significant correction, this can be a buying option.
All right, any significant correction could be a buying opportunity for Metropolis. Let's dive in straight to the viewer queries that is coming on our YouTube live feed as well. The first query coming in from Maheshwar. He's asking the view on Union Bank for medium to long term and at which level to add more or average. Union Bank, Aamar, be it the 6 months or YTD charts, it has not been doing well. But we are seeing the September quarter update, advances and deposits, both of them are up 9% each. So can we expect some bullish momentum to continue from here on, or should he at this point book his losses?
See, if you look at Union Bank is clearly, if you look at the intermediate term trend, continues to remain bearish. It did bounce back recently from a low of 118 towards 130, almost 129 currently. Again, it's around 119. So this, where it is currently, that's a very strong support zone. So 115, 116 is a very strong support zone for Union Bank. Till the time it doesn't reach that level, I don't think there's much cause of worry. On the upside, you can expect a major rally only above 130. because if you look at the charts on the long term, I would say it's more or less flattish. I wouldn't say it's very bearish, but it's more or less flattish. On the intermediate term trend, the trend remains quite negative. But since it's close to support zone, so we could expect a pullback. Any major rally only above 130 on the downside, 115 is good support. So if you want to look at from a short term perspective, maybe you can expect some pullback, but a rally only above 130.
Okay, all right, that is the view coming in for Union Bank of India. But another query coming in from Zulfikar Sarkar. He's asking what to do with Hudco stock. He has bought it at 325 rupees per share. Hudco, Aamar, on the charts, he's bought it at 325, but the stock is already, it's trading about like 221 levels. Today also the stock is down about 1% in trade as well, and be it the 1 month or 6 month perspective, the stock hasn't been doing well. We have been seeing that the PSU flavor is also losing momentum in the street as well. But can we expect it to recover back to its 300 odd levels?
So if you look at this stock and many of the stocks, they have corrected significantly, because if you look at the stock has corrected by almost 30%, and continues to remain bearish on the chart. So my advice to all those who are listening is that whenever you are entering any stock, you have to be very clear that whether it's from a long term or short term perspective. If you're long term, then go in tranches for good quality stocks. Short term, definitely have a stop loss in place. Now coming to Hudco, here I see is that the stock on the intermediate term trend continues to remain quite bearish. It is trying to find a base, because if I go back in time, so somewhere around the 10% lower, 203, or prior to that around, so the current levels, 200, 205, that's a strong support zone for the stock. Currently it's around 220 odd levels. I wouldn't recommend getting out at the current level, because you've already bought it at 325, it's around 220. You can expect a pullback, but don't expect any major rally in the stock happening in the near future. It could rally towards 230, 240 levels, where it could be with resistance, or maybe towards 250. So 230 to 50, 240 to 50 ideally, that's a zone of resistance for the stocks, very strong zone of resistance, because the structure of the stock is such that it really wouldn't rally in a hurry until there's some major positive trigger, unexpected positive trigger. Hope that answers your question.
Okay, all right, that is the view coming in. We have another query coming in from Srivardhan Gupta. He is asking the views on Surana Solar. He has around like 10,000 shares at 37 rupees per share, and he's asking whether it's time to book profits and what is the long-term view of this stock. Surana Solar, it is already trading about that 60 rupees per share right now. So he has made quite a bit of a profit. But today it is down about 5%. It has hit a lower circuit of 5%. Aamar, on the charts, how does Surana Solar stack up? We are seeing a push on renewable energy as well from the government as well. But how does the stock stack up on the charts for the long-term view as well?
Honestly, if you ask me, I really don't track this stock. But since you asked, so I pulled up on the chart, because the stock had been on upper circuit for quite some time, and now we are witnessing some lower circuit in the stock. So I would say you need to be really careful when you're getting in stocks which are hitting upper circuits for consecutive days or lower circuits for consecutive days, because that's a very illiquid sort of stock. So my advice is that if you're making decent money, please book profits and move out of such stocks.
All right. So booking profit is one of the advice that is coming on Surana Solar. Another viewer is asking his view on Bajaj Housing Finance. Gayatri is asking, whether it's the right time to hold on with Bajaj Housing Finance with respect to long-term or short-term view as well. Aamar, on the charts, Bajaj Housing Finance, recently listed entity as well. How does it look like?
So if I look at Bajaj Housing Finance, see, if you're looking at from a long-term perspective, this is one stock you can definitely keep on adding onto your portfolio on any significant correction. But then again, when I'm saying long-term perspective, that effectively means that at least if you can give 5 to 10 years, nothing like it, because the stock is from a group which has really performed and delivered. So the stock which is the group which is high on performance, and this sector also is such. If you look at housing finance, this is a sector again we will see a 3 to 5x growth over the next 15 to 20 years. So it's going to be huge. So if you want to hold from a long-term perspective, it could be a stock you can definitely keep a close watch on.
Okay, so long-term view coming in for Bajaj Housing Finance. Another query coming in from Satya. He's asking the view on Texmaco Infra for fresh investment from a 1 to 2 years perspective. Aamar, the stock hasn't been doing well from the 1 month perspective as well, but 6 months has given a modest returns of about 15%. How does it look like on the short-term charts for you for Texmaco Infra?
So if I look at this particular stock, see the stock has did rally significantly if we go back in time. So from almost 50 odd levels, the stock rallied towards 150, and currently it's around 117. Currently, from a intermediate term perspective, the stock is trying to find some bottom. Ideally, around 110 is a good level for entry. If that comes, you can look at some buying opportunity. But please remember that a top has been made. It's not going to break in a hurry. The recent highs which it has made, so it's more from a trading range. On the upside, 130, 135 is going to be the zone of resistance. So good from a trading perspective. If it corrects towards 110, 12, that can be a good level for entry. On the upside, 130, 135 is the zone of resistance for the stock.
Okay, that is the view coming in from Texmaco. Another query coming in from ARC is views on REC. He's asking whether there will be a fall towards the 510, 515 level and then again rise towards 550, 560 level in the short term. What do you see, this major support zone for REC, because it is already trading at about 526 levels on the chart summer. What do you, and plus in the past 1 month also the stock hasn't been doing well. It is about like 10% in the past 1 month.
So if we look at REC continues to remain positive on the long-term charts, no doubt about it, and it's very crucial, as you rightly said, 500 and 500, 510. That's a very strong support zone. So the cause of worry for REC would start if it reaches the 500 mark and sustains below the 500 mark. Till the time we don't see that, I don't see much of a cause of worry. Yes, the structure definitely has changed from an intermediate term perspective. So what it effectively means is that you could expect a pullback, because the stock did a pullback from almost 510 odd levels towards 570. So a 10% rally from 19th September till 1st of October. And then again, we are seeing the stock back towards 520 odd levels, 525 odd levels. So what it effectively means is that higher levels will be sold into and profit will be booked into REC, because till the time it doesn't reach the 570, 580 zone, it could consolidate between 500 and 570.
Okay, all right. Uddesha, just one last query we'll be taking in. Uddesha has been asking his views on PNB Bank. PNB Bank on the charts, how do you see Aamar for the short term? Past 1 month it is down about 2%. In past 6 months also PNB stock hasn't been doing well. But can we expect some breakout from here on for PNB?
Yeah, PNB actually, if you look at the stock, has been in a downtrend from almost 140 to odd levels since the first week of May, and currently it's on 106 odd levels. Ideally, you can hold on to the stock because the stock has got very strong support around the 100, 103 level. One level I would say is 112 is a level to watch out for. Sustaining above that level, then you can expect a rally towards 118, 120 odd levels. If you have position in the stock, you can hold on to it. 100, 102 is a very strong support zone for the stock. Or if you wish fresh entry, that can be a level for entry with a stop loss below 100.
All right. So some bullish momentum coming in for PNB Bank. But Aamar, what are your trading picks at this hour? We have seen successive rallies. Now we are seeing a bit of a breather after that. Today also we are seeing a bit of an uptick. But what are your trading picks at this point of time?
Yeah, I would say if I look at some of the stocks, then Petronet LNG is one. We've seen some sharp move. Currently, it's witnessing some sort of correction. It's around 358 odd levels. Any pullback towards 350 can be a buying opportunity with a stop loss below 340 and a target of 370 on the upside from a short-term perspective. The other is JK Paper is one stock one can keep a close watch on. Sustaining above the 500, 510 level, the stock could rally towards 545, 550 odd levels, and the stock would have a strong support below the 480 level. So that's a level, that's the another stock to keep a close watch.
Okay, so Petronet, LNG and JK paper, that is what we'll be watching out for. But thank you, Aamar. Thank you for taking out time and addressing viewer queries and sharing your trading strategy. We hope that we connect with you soon as well.
Thank you.
All right. Let's take a quick check at the markets and then we'll be connecting with our fundamental guest as well. We are seeing, Sensex, it was above that 400 points, but now it has cooled off from its day's high. It is up about 200 points and now Nifty also, it is above that 25,000 level, 25,050 levels. Among sectors, what is doing well is definitely Nifty IT index. We have the Q2 results coming in as well. We will be watching out how the index behaves in the remainder of the week as well. Nifty Energy, Nifty Metal, Nifty, these indices haven't been doing well. Nifty Metal especially, after successive rallies that we saw in the Nifty Metal index post the China stimulus measures, it is down now 0.3% in trade today. India Wix, we saw a bit of a cool off in the initial part of the trading session, but now it has shot up to about 1% and it is trading above that 14 levels. Top gainers on the Nifty 50 continue to be HCL Tech, but some of the new names have popped up on Nifty 50 list. That is your Trent, ITC, Kotak Mahindra Bank and HDFC Life. On the Nifty 50 losers list continue to be Britannia, HDFC Bank, Titan, Adani Ports, ONGC. Titan, it is it is one of the top Nifty 50 laggard in today's trading session after it came out with its September quarter update as well. But we'll be watching out on how the market texture unfolds. But let's get quickly on our board with our fundamental analyst of the show, Hemant Shah of 7 Islands PMS. Hemant, good morning. So good to have you on the show.
Thank you, Lovisha. Thank you for having us.
Yeah, Hemant, we saw a combination of factors that contributed to the market sell-off last week, be the geopolitical tensions, rising crude prices and the FI outflows. Do you expect, much more downside for the markets from here on?
No, thank you, Lovisha. See, basically our view is quite clear. The reasons, the geopolitical tensions, the oil price hike, the interest rates now decelerating in the US, the tensions across the globe, war-like scenarios, all this seen and these things are challenging for the equity market per se generally. But if you see in this amid all this challenges, US markets are doing well. Chinese market has done extremely well in the last 1 month itself. But having said that, the problem with the Indian market is biggest issue in the Indian market is the valuations, the high valuations. The valuations are so high that any negative factor, whether it is geopolitical or oil price hike or any domestic economic slowdown, it's difficult to digest that, and in terms of absorbing that factor, small factor. So rather than absorbing, the market is reacting to it, and I think hence the correction. And the valuation is the biggest challenge right now. But having said that, index is already corrected 4.5% broadly, and we do expect another maybe 3.5, 3 to 4% correction definitely. And I would say it's a welcome correction. Hence, we basically focus at 7 Island. We focus on valuation, visibility, and validation. So valuation comfort. If the market corrects, say another 3.5%, I think valuation comfort will be there. Though the growth is there in India, one of the largest, fastest growing economy. I mean that is goes without saying, but still, I think challenges are there in Indian markets as well.
Okay, some challenges are there as well. But Hemant, you mentioned that, Chinese markets are also rising and, we are seeing a shift on the FII flows as well. You also mentioned that, we can be seeing a 3 to 4% correction as well. But, we are seeing, past 5 days, FIIs have been net sellers as well. And, in the past 1 month, Hang Seng Index and even Chinese CSI Index, that has, given a relatively good stellar performance as well. So, this FII, flows, how serious is this move from India to China? Do you think that the buying from the DIIs can help stemming the further fall for the Indian markets?
No, I think so. Because of this last stimulus, the Chinese market has attracted global funds, that is for sure, and which is visible from their markets. Almost 20-25% rise in just 3 weeks. I mean, is outstanding. Which I think we have not witnessed this kind of a rise in any stock market. So naturally and surely, the fund flow is definitely is getting attracted to the Chinese market, and the one of the most important reason is the valuations. The valuations were quite reasonable, and with the stimulus support, with some interest rates stabilizing, I think world market is looking to invest in Chinese market. Having said that, I don't think the outflow from India can go to China any which way. So the I mean there can be two growth engines for the world global economy. I'm sure, because last decade was belongs to China for the global world market. I think India has joined the wagon, and I think India and China definitely can be the investment destination for the FIIs, and for the growth engine, India can be considered. And I don't see any major outflow is going to be there, and which is going to go to Chinese market from India. So I think that's fine. The growth is more important than the shift of the funds.
Okay, so do you believe that the FII interest towards India also is going to remain intact for the remainder of the year as well?
Yes,
Okay.
absolutely, absolutely. I think yes, India is definitely a good destination. FI interest will be there. Temporary shift might be there, but I think India will attract good funds maybe in the second half of the current year. This is what our view is.
Okay, second half of the calendar year. Okay. All right, Hemant, we are seeing that, Q2 earnings season, that is also going to begin from this week. In the last quarter, we saw that, mid-cap IT names, they performed fairly better than large caps. Do you believe this season also mid-caps are expected to outperform?
I think IT has its own challenges, but I think the large caps have weathered the challenges. They have started shifting their business models already, and I think mid caps are a little bit lagging behind, since the stock prices outperformed in the last quarter. But I think the numbers of the top IT companies, the large cap IT companies, will be definitely have a positive signal than the mid cap IT stocks. This is our view, at least for the next 1 or 2 quarters going forward, because we feel that large cap companies will have been a better position to weather the challenging situation, whether it's US election or whether it's the shift of the business, whether it is improvement of the AI and MI in the IT space, and whether it is capex. So I think large cap will be in a better position to weather that situation. Hence, still the valuations are high, so we don't recommend, or we don't have position actually in the large cap IT stock as of now. But I think that's a good space to be in, at least for the protection of the capital as well, for the time being. Yeah, but large caps, we feel large caps are in a better position for sure than the small cap.
Okay, all right. We can see some there. But, Hemant, coming to the other sectors of, Q2 results, most of the experts have been pointing out that chemicals and pharma, which has been which has been showing signs of underperformance in the past quarters, they might see a recovery in this quarter as well. Do you concur to this view as well?
Absolutely. So pharma, definitely we are reasonably positive. Pharma large caps as well as the pharma mid caps. In fact, large cap pharmas are definitely in a better position to so-called China plus one strategy. Many of the CDMO companies, many of the manufacturing capabilities and CDMO kind of opportunities are opening up for the large pharma companies specifically. And I think chemicals, we have a different view. Chemical sector is definitely still in the middle of the challenges, and after this Chinese impetus for the growth of the Chinese economy, I think the dumping of the chemicals will still be there for the Indian market per se. So I think chemicals, we are very much cautious, but pharma definitely select pockets. Again, large cap pocket seems to be in a sweet spot and seems to be in a growth trajectory, which we have not experienced in last almost 2 years. So I think for pharma, we are definitely positive, Lavisha.
Okay, all right. Pharma, you're definitely positive. But even which pockets of the market look vulnerable at this point, and which is a big avoid in this correction as well?
I think the vulnerable sector, as I said, is chemicals definitely is going to be vulnerable as well as volatile. So specialty, whether it is specialty, whether it is commodity, but stability is seen across the sectors, Lavisha, I guess. So because of these elections, the cement sector, and because of the monsoon, the cement sector is definitely were under pressure. The infrastructure sector was under pressure because of lack of new orders shooting from the government and central government. So I think those sectors which were already under pressure will start seeing good traction and green shoots in the next, maybe after this result season. You will see a good amount of order intake for all the infrastructure companies, and hence the cement companies are also going to be in a sweet spot because after the monsoon is over, elections are over, the input prices are under control. I What we expect is the only the volume growth, and the consolidation again has also happened in the cement space. So infra and cement sector, I think, should see definitely very good green shoots going forward after this quarterly results.
Okay,
But the
cement.
sectors challenging are again the chemicals.
Okay, chemicals are the challenging sector. Hemant, we didn't talk about banks. We saw that HDFC Bank also came out with its September quarter report saying that they are seeing a bit of a sequential uptick in deposits front, and the LCR ratio that has also seen an improvement, which has resulted to a drop in the LDR ratio as well. So banking sector, can we see the extension of a good performance for the banking sector this quarter?
Lovisha, our view is very clear. I think the large cap banks are definitely not going to give any positive or negative surprises for two reasons: the consolidation, the deposits is rate is slow, and in fact, the most important point is the credit growth, which is definitely challenging. Having said that, the small private sector bank as well as public sector banks can post a bit of surprise in terms of their growth, the profitability and improvement in NIMs. So I think there is no surprise in the large cap banks per se, except maybe one bank or so. But small cap banks can give definitely a better surprise in terms of numbers, whether it is private or whether it is public.
Okay,
But our
large
view
cap.
is probably our view is to invest in private banks in small category, small cap space.
Okay, all right. But we'll be watching out how the large caps also perform in the remainder of the year as well. Hemant, we have the MPC meeting which is kicking off today. Majority of them do not expect a cut in rates, but what do you pencil in? When do you expect the central bank to start its rate cut path?
Yeah, I think the even we are of the same view. The rates are not going to be cut for the October policy. What we feel is, I think from December onwards, we might see a 250 bips, 25 paise cut in the interest rates, which will help the banks, which will help the credit growth to happen. The problem today is the credit growth, but this policy will definitely give some hint that where we are heading. Are we expecting 25 to 25 bips, 25 percentage points for a decrease in the interest rate, or there is even more interest rate decrease in the offing in the next calendar year? So at least in the October policy, we expect the status quo, but from December onwards, we can see 25 bips fall in the interest rates.
Okay, all right. 25 basis points that you are marking from the December MPC meeting. But just a last question, Hemant. What should traders investing strategies should be at this point of time? We've seen excessive rallies. You're saying that a bit of a 3 to 4% correction is warranted. So should they hold and increase their cash positions at this point of time? What should they do at this point of time?
So I think, yeah, the best thing is to wait for the correction, little bit more correction, frankly, not to get carried away, not to get, do your research well. I think focus on three things, Lovisha, as I said: valuation, visibility, and validation. Wherever you get this kind of three confirmations, the investor should invest in that stock. Then let the global situation, geopolitical situation, or the global scenario, I think we can ignore it. But once you are comfortable with valuation, visibility, and validation, investors should not invest. And I think focus should be on the domestic growth story of India rather than any other sector, just like chemical, which is completely dependent on the Chinese policy, right? So I think let's focus on the India domestic sector, whether it is cement, whether it is large infra companies, or whether it is infra specific to say water space. I think focus on that area will have a better, investment thought process, and discipline has to be maintained. Patience has to be definitely maintained. I think cash generation is a good idea, but we are just entering the result season. Let's concentrate on the numbers, and that this quarter two numbers will definitely give a good direction for the current year, rather than depending on an Excel sheet which is prepared by so many fund houses for FY28. I think let's focus on the reality rather than the spreadsheet for FY27 and 28. And I would advise the investors to have patience and focus on valuation, visibility, and validation
Okay, so
before
focus on
investing.
reality and not on the spreadsheet. Thank you, Hemant. But
Absolutely.
thank you for sharing your
Absolutely.
insights. It was pleasure speaking to you, and we hope that we connect soon as well.
Thank you, Lovisha. Thank you for having us. Thank you.
Okay, just let's see how the market is standing right now. Let's see how the Sensex and Nifty has been performing. Sensex is still up about 150 points. Nifty is also holding above that 25,000 level. It was holding above that 25,100 level, but now it is off to that 25,000 level itself. We are seeing a bit of a consolidation, and we are seeing a bit of a red in the broader markets as well. Mid cap and small cap indices, they are down up to 1% in right now in the trading session. Among the sectoral indices, Nifty Metal is not doing well. Nifty PSU Bank indices is also not doing well. What seems to be holding well for the markets is Nifty FMCG, Nifty IT names, and Nifty Private Bank indices is also holding well, slightly in the green as well. India VIX, that has shot up to 1%, signaling a sign of an unease in the markets. It is above that 14 levels in the trade right now. Top gainers on the Nifty 50 continue to be ITC, Kotak Mahindra Bank, Dr. Reddy's Lab, Infosys, Apollo Hospital. So quite a bit of pharma names that is popping up to the Nifty 50 top charts as well. Among the top losers continue to be Titan, Adani Ports, Bharat Electronics, Adani Enterprises, and Coal India as well. But on that note, we have come to an end of this edition of the Opening Bell. We'll be back with Closing Bell at 3:30 p.m. and discuss the session performance and the key stocks that have moved during the day. Until then, stay tuned to moneycontrol.com for all the news updates and market insights.